Warren Buffett has spent over 60 years creating the greatest wealth in human history, and almost nobody understands why. His net worth exceeds $700 billion, making him one of the richest people who has ever lived. Yet Buffett is not the smartest investor. He does not have the best education, and he does not have access to secret information that others lack. His extraordinary success comes from something far more powerful, a set of mental models that fundamentally change how he thinks about money, business, and decisions. Today, we're revealing the 5 mental models that Warren Buffett uses to make billion-dollar decisions and create generational wealth. These mental models are not exclusive to Buffett. They are available to anyone willing to think differently about their decisions. This is the complete framework for how billionaires think and the cognitive tools you can use to transform your own decisions. The first mental model is the circle of competence, and it is the most important model in Buffett's entire thinking system. The circle of competence simply means know the boundaries of what you truly understand and stay inside them. Buffett famously said, "The size of that circle is not very important. Knowing its boundaries, however, is vital." Most investors fail because they stray into areas where they lack deep knowledge, chasing hot trends and FOMO investments. Buffett does the exact opposite. He avoids 90% of opportunities and focuses exclusively on what he deeply understands. For decades, Buffett avoided technology stocks entirely because he did not understand the business models and competitive dynamics. He watched Apple for years, studying the iPhone ecosystem, customer switching costs, brand loyalty, and long-term competitive advantage. Only when Buffett deeply understood Apple's moat and business model did he invest billions, making it Berkshire's largest holding. When asked why he avoided technology for so long, Buffett said, "If we can't find things within our circle of competence, we won't expand the circle. We'll wait." If you're watching this and you're intrigued by how the world's greatest investor thinks differently about decisions, like this video to show that mental models matter. And subscribe because we're revealing the psychology of billionaire thinking. The circle of competence works because it reduces the most dangerous enemy to investors: overconfidence in areas where you lack true knowledge. When you stay inside your circle, you have deep knowledge. You understand the industry dynamics. You can spot opportunities and risks that others miss. Buffett has said, risk comes from not knowing what you're doing, and the circle of competence eliminates that risk entirely. For Buffett, his circle includes insurance companies, consumer brands, utility companies, and increasingly financial services. These are industries where he has spent decades developing deep expertise and understanding. His circle does not include cryptocurrency, artificial intelligence, hardware, cutting-edge biotech, or speculative growth companies. Many investors made fortunes in these areas, but Buffett was willing to miss these opportunities because they fell outside his This brings us to the second mental model, Economic Moat, which identifies which businesses are truly defensible over decades. Economic Moat refers to a business's durable competitive advantage that allows it to maintain high profits and resist attacks from competitors. Buffett popularized this term and uses it constantly when evaluating whether a business is worth owning forever. He asks, does this business have a wide moat that protects it from competitors, or is it easily disrupted? There are 5 main types of moats that Buffett looks for: brand power, network effects, switching costs, cost advantages, and scale advantages. Coca-Cola has an incredible brand moat. The name has been trusted for 130 years, and customers willingly pay premium prices for the brand. Apple has switching costs as a moat. Once you own an iPhone, you are locked into the ecosystem of Apple products and services. Visa has network effects as a moat. The more merchants and customers using Visa, the more valuable Visa becomes to everyone. Buffett's insight is that moats create psychological stability because predictable earnings reduce emotional stress during market volatility. A business with no moat could be disrupted tomorrow, forcing constant anxiety about competition and change. A business with a wide moat can be held for decades with confidence that competitive advantages are durable and widening. This is why Buffett holds Coca-Cola, American Express, and Apple for decades. These businesses have moats that protect them for generations. The third mental model is margin of safety, which is the psychological cushion between what you pay and what something is worth. Buffett's most famous investing maxim is, price is what you pay, value is what you get. The margin of safety means you buy something only when the market price is significantly below your estimate of intrinsic value. Buffett typically requires a 20 to 30% discount between what something costs and what you believe it is worth. This margin of safety creates psychological protection. If you are wrong about the value, you still have cushion against losses. The margin of safety also removes the pressure to perfectly time the market or predict the future with accuracy. Buffett famously deployed massive capital during the 2008 financial crises when everyone else was panicking and selling stocks. Prices crashed below intrinsic value, creating enormous margins of safety for patient investors with capital available. This is the benefit of the model. It converts fear into opportunity. When everyone else is fearful and selling, Buffett's principle is, be fearful when others are greedy, and greedy when others are fearful. When stock prices soar and valuations reach extremes, Buffett sits in cash, waiting for better opportunities. When stocks crash and panic spreads, Buffett deploys capital because margins of safety become enormous. This contrarian behavior is psychologically difficult because it requires going opposite the crowd consistently. The fourth mental model is inversion thinking, which solves problems by asking what would cause failure instead of what causes success. Most people ask, how can I succeed at this business? Buffett asks the opposite. What would cause this business to fail spectacularly? This inversion reveals fatal flaws that forward-thinking questions might miss entirely. Buffett uses mental checklists to prevent catastrophic mistakes rather than find genius ideas. His checklist includes, is the business simple and understandable? Does it have consistent earnings? Does it have good returns on equity? Does it have little debt? Is management competent and trustworthy? Is the stock at a reasonable price? What are the ways this business could fail? Are there hidden risks I am missing? Has management shown wisdom with capital allocation? By inverting each question and asking failure scenarios, Buffett identifies companies he must avoid. He avoided the dot-com bubble by inverting. What if most internet companies have zero revenue and no realistic path to profitability? He avoided excessive leverage in financial companies by asking, what if credit conditions deteriorate and debt becomes impossible to service? Inversion prevents overconfidence in apparently great opportunities that have hidden fatal flaws. The fifth mental model is opportunity cost thinking, which means every capital decision sacrifices other opportunities. Buffett said, the difference between successful people and really successful people is that really successful people say no to almost everything. This means that investing $100 million in Company A means that capital is unavailable for Company B, Company C, and Company D. Most investors evaluate opportunities individually. Is this good? Should I buy this? Buffett evaluates opportunities comparatively. Is this the best use of my capital right now? This forces discipline. If you have $100 million, you must choose between thousands of opportunities, and most will not be your top choices. Buffett's philosophy is to concentrate capital in the very best ideas rather than diversifying into dozens of mediocre positions. Berkshire Hathaway holds approximately 10 major positions, not hundreds of diverse stocks. This concentration means Buffett focuses intensely on the highest return investments and ignores everything else. Now, here is the revolutionary insight. These 5 mental models are not independent. They work together as an integrated system. Your circle of competence defines what industries you analyze and understand deeply. Your moat analysis identifies which businesses within that circle have durable competitive advantages. Your inversion thinking reveals which seemingly great companies actually have hidden fatal flaws. Your margin of safety determines your buying criteria. Only invest when prices far below intrinsic value. Your opportunity cost thinking ensures you deploy limited capital only into your very best opportunities. This system creates clarity, consistency, and psychological resilience through entire market cycles. When markets crash and panic spreads, you remain calm because you understand your businesses deeply and have margins of safety. When valuations soar and everyone chases hot trends, you sit in cash waiting because you honor your circle of competence. When seemingly brilliant opportunities appear, you invert your thinking to identify hidden risks others miss. The result is the greatest wealth creation system in history. $700 billion in Berkshire Hathaway value. These mental models remove emotion from decision-making and create systematic thinking that transcends emotional bias. Most investors fail because they act on fear, greed, haste, and herd behavior. Buffett's mental models create frameworks that bypass these psychological weaknesses entirely. You do not need genius-level intelligence to use these models, and you need basic investment understanding, discipline to follow principles, patience to wait for opportunities, and humility. These qualities can be developed by anyone willing to think differently about their decisions. The psychology of mental models is that they align with how great thinking actually works. Human brains are easily fooled by emotions, biases, and herd thinking, and mental models create scaffolding that bypasses these psychological weaknesses. You can apply these 5 mental models to any major decision in your life, not just investments. Circle of competence means stay inside what you understand deeply. Economic moat means invest only where you have durable advantages. Margin of safety means build cushion into every major decision. Inversion thinking means ask what could go wrong before committing. An opportunity cost thinking means every yes means saying no to something else. The greatest insight is that Buffett's success is not mysterious or dependent on genius-level intelligence because his success comes from applying systematic thinking frameworks consistently for 60-plus years. You can adopt these same frameworks starting today by defining your circle of competence. Which industries do you understand deeply and studying the moats of the best companies in those industries to understand what competitive advantages make them defensible? Calculate the margin of safety by determining what discount from intrinsic value makes you comfortable investing in practice. Inversion thinking before making major decisions by identifying 10 ways they could fail. Apply opportunity cost thinking by saying no to 95% of opportunities to focus on your very best ideas. Understanding that Warren Buffett's mental models are not secrets because they are publicly available for anyone to study and apply. The question is not whether these models work. The question is whether you have the discipline to use them consistently and start today, watching how these 5 mental models transform your decision-making and financial future forever. These are the secrets of compounding success over a lifetime of disciplined decisions. Imagine the power you gain by simply adopting the systematic thinking of a billionaire. Commit to the models today and see your investment philosophy change instantly. Do not just watch this video, take action and apply these frameworks to your life.